All right, let's talk about the stock market. It's been all over the place lately, right? It's enough to make anyone feel a little anxious. One day you're up and the next you're down. So today, we're going to break down a really clear strategy for how to handle all this craziness, and it's all based on the real-world playbook of a very successful long-term investor. The best way I've ever heard the market described is with this one simple analogy. It's a roller coaster. And it's so true. Some people absolutely love the thrill, the giant drops, the big climbs. They can't get enough. And then you have other people. They get on one time and they are done. Never again. And that's really the million-dollar question, isn't it? Because look, the drops are going to happen. That's just part of the ride. You can't avoid them. The real secret is figuring out how to handle them so you can actually stick around for that incredible journey all the way to the top.
When things are good, man, they feel great. It's that green light moment. You might check your portfolio and see it jump by thousands, even tens of thousands of dollars in a single day. Everything's going up, and you feel like a genius. It feels like it's never going to stop. But then, just like that, bam, the market hits a red light. Everything just stops. Or worse, it starts trending down. And this can go on for weeks, sometimes even months. And that whiplash, that sudden shift from green to red, is what shakes most people out of the market. So how do the pros stay on? Well, it really comes down to two key things. The first part of the solution, and honestly, it's the most important, has nothing to do with stock picks. It's all about your mindset. It's about harnessing the simple but incredibly powerful force of patience.
Okay, so take a look at this. This is the actual journey of a real-life public portfolio. It started at $1.2 million. But look closely at 2022 and 2023. You see those long, flat lines? That's months of doing absolutely nothing, or even going down. Now, most people would have panicked and sold, but by just staying patient, the portfolio tripled to $3.6 million. The growth wasn't a straight line up. It happened in big bursts between those boring, flat periods.
And that portfolio's journey just perfectly proves this point. The people who really win in investing over the long haul are the ones with almost unbelievable patience. I mean, think about Warren Buffett. He bought his first stock way back in 1942, right in the middle of World War II. He's been doing this for over 80 years. His secret isn't some magic trick, it's time. So patience is the mindset. But what's the actual strategy? You can't just be patient with bad investments. That brings us to the second piece of the puzzle, building what's called an all-weather portfolio. The goal here is to have a portfolio that can find ways to make money no matter what the market is doing. So here's the key idea. Your portfolio basically needs two different engines. In a bull market, when everything's going up, your main engine is capital appreciation. Simple enough. Your stocks are worth more. But in a bear market, when things are going down or just flat, you need a different engine to kick in. And that's where you make money by collecting dividend income and from strategic hedges. And this isn't just theory. We're talking about real cash. Just look at these examples of annual dividend payments from one portfolio. We're talking thousands of dollars a year from these companies. That's money that gets deposited into your account whether the stock price goes up, down, or sideways. It's like getting paid to be patient. And even better, you can use that cash to buy more great stocks when they're on sale.
Now, another tool for those down markets is hedging. I know it sounds super complicated, but the basic idea is actually pretty simple. It's like taking out a small insurance policy. You can make a calculated bet that a small part of the market might go down. For example, if the market crashes, a volatile stock might fall even harder, so a small hedge against it could pay off big, giving you a pile of cash to go shopping with when everyone else is panicking. It's a way to turn defense into some serious offense.
Okay, so let's put it all together. We've got the patient mindset and the all-weather portfolio structure. So what kind of company do you actually want to own for the long haul? Let's zoom in on a real-world example of what we can call a fortress stock. The number one thing that defines a fortress stock is this concept called an economic moat. And the analogy is perfect. Just like a moat protects a castle from being attacked, a company's economic moat is a powerful, sustainable advantage that makes it almost impossible for competitors to steal their business. This is what you hunt for. And American Express is just a textbook example of a company with a massive moat. It's built on these four huge pillars you see here: a closed-loop network, a premium brand, a value ecosystem, and something called vertical integration. Let's quickly break down why that mix is so darn powerful.
So what makes this moat so strong is this closed-loop network. All that really means is unlike Visa or MasterCard, who are just middlemen, Amex is both the bank and the network. They see what you're buying and what the store is selling. That data is incredibly valuable. It helps them attract wealthy customers who don't stop spending during a recession. Then they build this whole ecosystem of amazing perks around them. Travel, dining, that makes it really hard to leave. And that's the vertical integration part. They make money in multiple ways on every single transaction. It's no surprise it's one of Warren Buffett's biggest investments.
And here's the real kicker. With a business model that's basically a fortress, you'd think the stock would be crazy expensive, right? Well, right now, the source of our analysis thinks it's actually a bargain. It's trading at a forward PE ratio of just 17. The argument is that a best-in-class company like this should probably be trading in the mid-20s. This is the holy grail, a fantastic company at what looks like a fair price. So, when you zoom out, it's pretty clear the stock market is one of the most powerful wealth creation machines ever invented. All the short-term drama is just noise. That roller coaster, over the long run, always ends up higher than where it started. So the only real question you have to ask yourself is, are you patient enough to hold on to your ticket for the whole ride?